We're wrapping our coverage now at Metals Investor Forum, and my guest now is Jay Taylor of Gold, Energy, and Tech Stocks. Jay, I was happy to have you on because I want to really tap into your brain and understand where you feel we are at with the gold price. We've obviously had a good start, Friday aside here. Do you feel good about gold?
Yeah, I think you're looking at gold. Obviously, gold retains its value over long periods of time. So no matter what happens, I think people need to buy some gold, own some gold, in terms of just retaining their wealth, because the currency is going to come under more and more pressure. The U.S. economy, the U.S. fiscal situation is very dire. You won't get that from the mainstream media, but we're looking at $22 trillion of debt. That means a 1% increase increases the interest expense by $220 billion. And so if you look at the charts, you start to look at the dynamics, the debt is catching up with us. So what I fear is coming is it's very difficult for the Fed to trim back its balance sheet, to go back to normal, to normalize its balance sheet. We see the current Fed chairman trying to do it, but as soon as he does, the equity markets come under pressure. He can't take 4% interest rates anymore, it seems. So I think that longer term, we'll probably go back to QE again. I think that's probably perhaps this year. It's not what I want to see, because I would like to see a stable monetary system, higher interest rates, so people get rewarded for savings. But frankly, I think we're in such dire straits that we're going to see the Fed and other central banks around the world loosening the spigots again.
Well, Jay, you were saying you feel that the Fed really has a fear of a 2008, 2009 repeat here.
Yes. Could you imagine if you're the Fed chairman, how you'd want to be blamed for not loosening the monetary spigots in time to keep that from happening? So
you're bullish gold. In turn, you're bullish gold mining stocks?
Yes, I'd say so, for sure. I think the mining stocks it's an unloved sector, really. But I also think that we need to see a pullback in the equity market. I think there's still confidence in the big market, in the general equity market. And gold, it tends to be countercyclical, or tends to work against, negatively correlated with mainstream products. And so I think if we get a real major pullback in equities, I think that's when you'll see the gold shares do well.
We often talk about that PDAC curse, and we don't know if it's real or not, but usually we have seen that from January to March, gold has a good run, and then we're kind of stuck in this no man's land. But you think this year could be?
It could be. I don't know the timing for sure. I mean, there's seasonality always comes into play, I think, later in the summer and so forth, because of the Asian play and so forth things. But it's hard to say. But I just think that there's a lot of great values. And we might start to see, I think we've started to see the equities outperform gold over a little bit of recent times. So I think we could see a stronger equity market than a gold market, than a bullion market, but especially if the big equity market comes down or has a real correction.
And just to give us some context here, Jay, when you speak about being bullish on gold, what kind of range are you looking at? Because being bullish to me means something different to you, to the next person. So what does it mean?
I think, because we're measuring it in dollars, which isn't a stable measuring stick, but given that, I think we need to get through 1350, 1360, and then the first major target that I see, and I'm not sure of the timing, I think we're looking at 1700, something like that.
This year?
No, I wouldn't say this year necessarily, but over the next year or two.
All right. 1700 gold, 1 to 2 year timeline. Jay
I think so.
All right. You heard it here first. Thank you so much, Jay.
You're welcome.
And thanks for watching. We'll have more for you on Kitco.com.